Hey everybody, Bargain Brother with you, prize winning penny pincher, here as always to help you make and save money, mostly make money. Today, we're going to talk about saving money a little bit, and it has to do with selling rental property and the tax burden that can come with it. But before we do, if you find value in this content, do me a favor, hit that like button, subscribe, and share, and I would really appreciate that. Now, you've done well with your rental property, okay? You bought that property, it served you well for the last, let's just call it 6 years. You've made really good passive income. You've got some great tax benefits, but now the market is sky high. You've got to sell this place. You're not going to get more for it in the foreseeable future. So you're looking at a really big gain, and you're looking at a big tax bill associated with that gain. Now, full disclosure, I am a licensed realtor. I am not a licensed tax professional. Consult your tax professional on the information that I'm about to share with you. So, capital gains is what you pay when you sell stuff like a large a real estate investment. So, let's just say that you make $100,000. Let's use easy round numbers. You make $100,000 on the sale of the property that you're selling. You can expect a capital gains hit that's going to start at 15%, depending on how your taxes are filed, whether it's married, jointly, etc. Again, consult your tax professional, but it's going to start at 15%. The first way that you can save some of that money and not give it all to Uncle Sam is by doing what's called tax harvesting. And what you're doing in that case is, let's say you incurred a capital gains loss during that same year. Let's say you had two buildings. You sold one and you had a $40,000 loss. You sold another one and you had a $100,000 gain. So you are able to subtract that $40,000 loss from the $100,000 gain that you had, and you won't pay capital gains tax on $100,000 of actual gain. You'll pay capital gains tax on $60,000 because you're subtracting the $40,000 from the 100. So that's the first way to save some money on capital gains tax, is by tax harvesting or using a capital gains loss to offset the capital gain. That's just kind of putting it in layman's terms. Okay, so the first way to save on the capital gains is what we just discussed, which was tax harvesting. Now let's talk about number two. Number two is saving money via using the 1031 exchange tax code. And basically what that means is you're going to take that $100,000, we're going to keep using the same easy round numbers. You're going to take that same $100,000 that you gained from that property that you sold, and you're going to roll it over into another real estate investment property. Now, that helps you to defer the taxes, because at some point you may have to pay, but you can keep deferring it, and this is a way to successfully do it using the 1031 tax exchange. Take the money, roll it into another real estate investment. Now, again, FYI, I'm not a tax professional. Consult your tax professional on the information that I'm giving. But you do have some time constraints, and tax code changes all the time. As of the time of this video being done, I believe you get 180 days to close on your next property. So if you close within that 180 days, you will be able to defer the taxes on the $100,000 that you made off of selling that rental property. But there are some other stipulations in there. For instance, if you have taxes that have to be filed within that 180 days, that's something that you may need to talk to your tax professional on. It can get a little tricky. But the long and short that I'm trying to get you clear on is you do have options to save on capital gains taxes, and using the 1031 tax exchange is an option that you can use, and thousands of people do it every year. So take advantage of the 1031 tax exchange to be able to defer the taxes on capital gains from selling real estate investment property. Okay, so we've talked about harvesting the taxes to be able to minimize the tax, and we've talked about the 1031 exchange to be able to defer the tax by reinvesting the gain that you got from selling your real estate rental property. Now, let's talk about the third way to kind of fight back against this capital gains situation. That one is converting that rental property into your primary residence. Now, there's a couple ways you can do that. Now, let's say you own what in my part of the country we call a 4-unit building. You may call it a fourplex, depending on where you live. You take that fourplex, one of the tenants moves out, you decide to move in, you turn that into your primary residence. Now, as of the time of this video, if that is your primary residence for 2 of the last 5 years, it qualifies as that being your homestead. In other words, that's your primary residence, and you do not pay a capital gains tax on the sale of property that's your primary residence, even if it has additional units that you're leasing. If that's your primary residence, you don't pay a capital gains tax for up to $250,000 as a single person, and if you're married, it doubles. So you don't pay a capital gains tax for $500,000 for a married couple, okay, or $250,000 for a single person. So either way it goes, there's a lot of capital gain that you can have in there, and that becomes your money, totally no money due to the government if you fall within those parameters. So those are the 3 things that I wanted to share with you today on how you can fight back against capital gains tax. Harvesting your tax, 1031 exchange, converting the property to your primary residence. Okay, so that's all I got for today. Thank you for watching this video. Please don't forget to subscribe, like, and share. I will be back with more videos soon to tell you how you can make or save money, mostly make money. But today we talked about saving money a little bit, right? And that's cool sometimes too. And don't forget, on your way up to the peak of your mountain, if you take the stairs or the elevator, it does not matter as long as you get there. And on that note, I will see you in the next video.